Good evening and welcome to my midweek recap and plan ahead for the S&P 500. First of all, I'll go over the few trades that I did have. I was holding one position over the weekend for the S&P here, the 16 March 280 calls at 70. Half was taken off just before the close on Friday as it looked like it was running into this trend resistance. The other half closed out on a break below the opening 15-minute range here on Monday. Left a lot on the table. As you can see, it ran right up. So on these plays, I need to be more cognizant of where the 8 EMA is coming up, especially when it's rising into a gap up over a previous resistance. So just a lesson to be learned there for myself. And now on to the rest of the week. Tuesday, no trade was taken. Nice little possible reversal turned into a bearish engulfing day and is now put in what looks like a new lower high in relation to this 286 over here back in January. Price action has now closed below a lot of significant moving averages, which I'll get to momentarily. Took one trade in some calls here on Wednesday, March 5th, 275 calls here in at 210. Trailed me out below the low of the day at 145. A little bit larger of a loss than I actually wanted to take. It's no excuse, but I put this trade in and I left and did not change my stop loss before I left. So that's on me. Took a larger loss than I wanted to, but sometimes that does happen. I just have to be a little bit more aware of that when I do decide to leave my desk. Anyways, going forward into my plan and what I will be looking for, you see this big red block over here. This is a big resistance zone. New intermediate trend line is coming down here, should meet price around 275 to 273 area. The 50 SMA is the red line, blue line's 8 EMA, and this yellow line below it is the 21 EMA. All these lines coincide with the moving averages over here on the daily time frame. So a lot of levels right above price, so there is going to be a significant amount of resistance here. Now, anytime I have had a resistance zone or even a support zone for that matter, price action, or excuse me, the market makers have pushed price action straight back up through it. Just like today, there should have been a lot of support here from these moving averages. Market makers saw that, probably pushed straight down into that area of demand. Stops were just below. They went ahead, absorbed all those stops, and now we're down here at 270 testing this this support level. What I will be looking for on Thursday on the open, ideally a nice little open up here around 273 area and then a push back down below this, but since price action is already gapping down to 270 after hours, that's probably not going to be the case. So what I will look for is either a support pattern here at 270, strong red, call it a 5-minute candle at least off of the open, strong green candle off of the open within the first 5 minutes for a play above it, possibly up to around 275, just trail my stop loss based on the 5-minute closings. If price action opens up, hovers around this level, and then breaks below 270, I will take some 270 puts. Because I'm making the assumption that price action has now put in a lower high, maybe setting up for a head and shoulders pattern, but that's a little bit too far out in the future to speculate on. I'm going to be looking more towards a bearish bias on the day for Thursday for this breakdown below 270. Look for a consolidation right here around 267, which just coincides with this previous high over here, which should hold as support at least temporarily. And then all the way down here, a target of around 264 to 265. I don't foresee price action coming down too much further below there. May come down and test this 200 SMA. We'll see what happens because it has not put in a new high. So may need to test it again before it does make another move up. If that's the case, I'll just simply sit in puts, trade my levels, and continue on about my business. This will be my trade plan for Thursday and Friday. Have a good evening and good luck.